Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy. Once again, we are here to review on this segment the uh, process that we go through uh, after we publish the reports, basically every Saturday, um, as we have been doing here for the past few years. That will allow you basically to follow the algorithm in terms of the weekly swing trades. When you get a password, you basically come here to the members area. You put your password in here, and on the right side you will see a selection of subscriptions that basically allow you to obtain about 5 reports that we published. If you click on the daily futures, stocks, and ETFs reports, these are the algorithms that we are using to day trade the market. And what we do basically is that you receive this information the night before. We prepare you for today's trading. You receive this information the night before, and in essence, you can execute this information on the electronic markets or the Globex markets at your own time, depending on what your trading schedule is. So the algorithm basically runs 23 hours a day, and we teach you how to identify the new setup that takes place and how to identify the trigger points for buying or selling. And once you activate those trigger points, what levels do you use or how you use your stops and profit objectives. So here, what you see here is basically the spreadsheet that was published on Saturday, and it gives you the colored section is the algorithms that we use for today's trading. And if you just take a look at silver for a minute, just to use this as an example, on Saturday, the algorithm told you that if silver comes down to 1589 to 1580, it's a buy one and buy two level. Very specifically, it tells you to buy one at 1589. And we teach you the methodology for you to identify the signal. In this case, it went long at basically 93, and we took a quick $200 profit objective, and we're flat for the day. So we use these algorithms to identify entry points when the criteria meets basically the methodology that we follow and the discipline that we follow. So we upload this uh, algorithms here in the room, and we day trade basically in the room. Futures contracts. We also day trade ETFs, which are aggressive ETFs. They're inverse triple X velocity ETFs like JNUG. Or in the silver market, basically we use ETFs like USLV. Um, we manage the risk to basically eliminate the overnight margin obligation of a futures contract by positioning ourselves with an ETF like USLV, which is in the silver market. In addition to these daily algorithms that you see here, which clearly identify for you entry points and exit points as well as stops for day trading, we publish a weekly report, which is called the Weekly Futures Gold and Silver Report, that gives you a swing trading signal for the following week. These are levels that you can use to initiate swing trade positions that will last anywhere from 1 to 5 days. And in here, very specifically, the summary tells you the sentiment of the market. It gives you a pivot point, what to look out for, where to exit your long positions. It gives you prices for you to execute. Also on the short, it very transparently tells you the levels that you should exit your shorts. And so what you do is you wait for the market to come to those levels. Now, just to give an idea of the algorithm here, um, this components, these components that you see here are the ones that are the components that we use in the makeup of the algorithm, but we show it here individually so that you can follow it at your discretion. And basically, what it tells you is the first component, we use the moving averages, and it tells you that the June gold futures contract closed at 1172 on Friday, and that the market closing below the 9-day moving average of 1195 is confirmation that the weekly trend momentum is bearish. Now, the algorithm also gives you an alternate count, and it tells you a close above the 9-day moving average would negate the weekly bearish short-term trend to neutral. The second component that we use is the weekly momentum indicator, that is basically the metrics or the pivot point for the week that identifies the trend. Uptrend above the code is an uptrend, below is a bearish trend. With the market closing below the VC weekly price momentum indicator of 1180, it confirms that the price momentum is bearish in the gold. But it also tells you that a close above the VC weekly of 1180, it would trigger weekly stops and negate the bearish signal to neutral. So this is telling us that a close above 1180 is what we need to look to neutralize the downtrend. Another close, a second close above 1180 would activate the uptrend on a weekly basis. Here it tells you that if you're short, look to take some profits into corrections at the 1154 to 1136 levels. Being that we are trading at about 1172, which is just under the weekly pivot code, we are waiting basically for position trading for the B1, B2 levels to harmonically synchronize themselves at these levels of 1154 to 1136 on the weekly signals. The daily algorithms are telling you the buy one level is 1161 to 1153. And so you can see the synergy now getting closer to the blue levels or the buy one, buy two levels on the daily and the weekly signals. So we're not trading in the gold right now. We're waiting for either a close above 1180, which is the weekly pivot point, or the market to come down into that 1154 to 1136 area, which is the ideal place to buy based on the weekly swing trading signals that we have. For the silver market, let's take a quick look at the silver market here. The weekly moving averages, the July silver futures contract closed at 1609 on Friday, and the market closing below the 9-day moving average of 1650 is confirmation that the weekly trend momentum is bearish. But it tells you a close above 1650 would negate the weekly bearish short-term trend to neutral. So 1650 is the moving average pivot point that we want to see the market close above. With the bearishness in the market, it tells you basically that with the market closing below the VC weekly price momentum indicator of 1640, which is the pivot for the week, the moving average for the week is 1650. So you begin to see how important this price level is seems to be on the weekly signal, that closing above 1640 to 1650, it would basically trigger weekly stops and negate the bearish signal to neutral. Second close above 1640 would activate the uptrend. The weekly price indicator is telling us to look to take profits on shorts into corrections at the buy one and buy two levels of 1562 to 1515, and then to go long on a weekly reversal stop. And if you're long, use the 1515 level as a stop close only. If you get long either at 1562 or at 1640 or above, use the 1686 to 1764 as profit objectives for the swing trade. So what we're looking at here is, in terms of the gold and silver market, is that we're trading basically at levels that are more or less in midway to the bottom line. But what you want to see here is that the daily low today was 1588. It coincided with today's algorithm of 1589, which we purchased for a day trade. And we're looking for basically the 1562, 1515 levels to be tested, or a close above 1640 for us to get back on the long side or the uptrend. One of the questions that I have been getting basically from subscribers is that how do I measure the risk on the swing trade and the day trade? Well, we have defined basically for the swing trade the risk to be the weekly close. But if you carrying an open position all through the week is a little bit too stressful, then you can use a dollar stop for the swing trade position, which is $1,000, or basically we're looking at about 20 cents on the silver market, and $20 in the gold market as a dollar stop, besides the weekly stop, just in case that the market does, come down as it did last week, to test lower levels of support. The other thing I want to mention to subscribers that are trading with us, that you need to really adhere to the discipline of trading the correct size according to your financial condition, according to your personal situation. I'm finding that traders that are not financially equipped are over trading. They're buying too many contracts. One of the reasons why I use one contract is because it's a full-size contract, and that's plenty. And so I've learned that some subscribers are taking on a $10,000 account, a 3-4 mini contracts in silver and 2-3 mini contracts in gold. That is a great recipe for disaster. Okay, if you want to manage the account correctly, do it percentage-wise, but not overtrade the account. This is one of the things that I see constantly from subscribers that come in, they get greedy, aggressive, they want right away results, and they want to build the account right away. And what happens is they don't stick to the discipline of following the algorithm, and pretty soon they're down 50% on their account. Please measure the risk of margin accordingly, and manage the risk on your account, maximize it either to a 10% drawdown, go flat, liquidate regardless, so you do need to be active in managing the risk in your position, because we are not brokers. We don't control how many you buy or how many you sell, but I can certainly show you how I'm doing it, and if you follow what we're doing, 90% of the time, you are going to make a lot of money. The thing I want to point out to you with regards to the swing trading program, that we're finding the program to be very successful in the period that we've been trading it. The day trading program is running about 63% probable profitability, with a 3-to-1 risk-reward ratio. The swing trading is running at 93% probability with the same ratio, 3-to-1 risk-reward ratio. The numbers are just very, very good numbers that we're posting, and you should be in a position, if you are in a financial condition to trade the full-size contract, you should be able to mirror the results that we've been getting, which basically are indicating a consistent pattern with a methodical way of deploying the signals, and you can see all of that in the track record. We do take losses, but we minimize the losses, and fortunately, we've been able to keep those losses at a minimum and let basically the winning trades run. And we've had 3 or 4 months in a row where we've had nothing but winning trades. You can take a look at everything here. We post everything once we execute the trade in the room, and then we transfer this to this website, which is called imatotradelivesignals.com. Once again, my name is Patrick MontesDeOca. If you have any questions at all regarding the application of this algorithm and how we are basically building this tremendous track record, please feel free to contact me. The toll-free number is 877-733-1511. The direct line is 805 area code 418-1744, or you can email me at support@ema with the number 2trade.com. That's support@ema2trade.com. Once again, this is Patrick MontesDeOca. I want to wish you a very, very successful week, and until next time, my friends, be well. Good trading.